So I don't want to confine the analysis to only one type, so I want to take a look at a couple other things that's in like classical style analysis that will show you why I'm really looking for a bear market to come up. The first thing I want to show you is a few divergence studies. So the first one I want to show you is called the relative strength index. So the idea of this index is that when the market continues higher, but the relative strength index fails to become oversold or as overbought as it was at a previous high, that means that the trend is losing strength. So we take a look at this, we see, okay, it gets very overbought right there, it breaks this red line right here, and then we start seeing it decline, and then it can't reach the same level that it did before right here. That's my first hint of a bearish swing. So that's in the NASDAQ. We take a look at the Dow there, that is much more pronounced. So we have a high there, a higher high here, which is very healthy, and then we have that, which that is a very bearish divergence. If you notice, like if we go back in time, and perhaps a monthly chart will even show us. We'll stick with a weekly one. A weekly chart, let's see if it shows us. We see that the highest point in the index was right here, but by the time it actually made the true high, the RSI was already down to there. And then we know what happened after that. So that's the first divergence analysis I want to show you. Second one is going to be the RSI on a shorter term basis, which if I go into here, in a bull market, this is just the daily chart. In a bull market, the RSI will tend to bounce off the 40-ish level and it'll go up to about the 70 to 80 level. In a bear market, it will bounce off of the 20 to 30 level and only get up to the 60 level. So this is how I picked the top actually. When I saw this initial decline right here in the market, and let's get a little more viewable. When I saw this initial decline in the market and I saw it go down to the 40 level, I was like, okay, it's still a bull market. But then when it got to here and showed signs of reversing, it was only at the 60 point. So what did I do? I sold short, and that actually got me out a few points from the top. Now we see what happens. It's using the 40 level as resistance and down to the 30-ish level, to maybe 25 even, as support. If we go back in history, we see when this happens, when it uses those lower levels as support and resistance, like right here it uses the 60 level, that happens. And then once it starts using the 40 level again as support, that happens. So those are two things that really led me to believe that this was going to be the end of the market. The final thing that I want to show you is the Dow Jones Industrials to the transports. Industrials are generally viewed as a safe haven. Transports, not so much. They're very interest rate sensitive and sensitive to economic conditions. Actually, let's do this. I'm going to show you the industrials known as a safe haven versus small cap stocks. The Russell 2000, which has been known as, they really outperformed last year. So I'm going to do a ratio chart of the DJI over the Russell 2000. And this is what we want to look for. Over a long term, when the ratio is inclining, that means that the Dow Jones, when it's ascending, that means the Dow Jones is outperforming small caps. As you see at the market bottom, right around this area, small caps outperformed. They kept outperforming. They were doing fantastic compared to the Dow. Just fantastic. And then suddenly, right here, and I'll just draw a trend line for giggles, right there, the trend was broken. Dow Jones Industrials are going to lead the Russell 2000. And when that happens, small caps normally break down first, which they did right here, and then the Dow Jones is the last one to break down. And actually, if we look at the Russell 2000 itself, you can see that right here is the classic head and shoulders pattern that gives a price target of still about 6% below where the market is right now. So that's the classical analysis for why I believe that we have topped out and we are now in a bear market.